Welcome back to Switzer. It's now time for our king of charts, Lance Lay, to tell us what his charts are telling him about the outlook for global markets. Welcome, Lance.
Hi, Peter.
Now, as we always do, we always look back at the last time you're on the show to see if you made a mistake or you got it right. Okay, so here goes.
See where the 1744, the M there that's on the chart, what that is was that was projected back in the March show here.
Yeah, okay.
And so if this gets, I thought this would be taken out towards the end of the year. We're heading towards the end of the year now. Yeah. So October, November, December, that'd be nice.
And November, December is good for stocks. Okay, Lance, now some people look at it and say, what in the hell was he talking about there? So in a nutshell, what was it?
Well, I thought the market was going to go sideways with an upward bias. Okay. Okay. And in the last month, since the show, the market has gone up and it's basically come back down again. It actually made a new high on the US S&P 500 on the 19th of September. And it's come back off, so it's done what I said. Yeah, okay. So, you, as always, Lance, you got it right. I'm looking forward to the time when you completely stuffed it up, Lance. Or maybe I'm not. So what are you seeing right now? Because you might have heard Gary earlier. What's your feeling about what's going on in the market now? Well, the US is actually showing, I think, signs of a bit of a top formation, actually. Okay. And I think tactically, we're really struggling at the moment to get over that 1744. Right. Now, we've done very well already in the last 11 months, having gone up 28.8%. And a nice rise. Very nice rise. And you know, the way that it's travelling, I wouldn't be surprised if it sort of went over the 744, but then really came off a little bit heavier and show a bit of a toppy formation. It needs to continue to go sideways. And, you know, as you and I know, when it goes sideways, it's not a nice sideways. It usually goes down and scares people a little bit. And I have read some experts out there thinking that the US market's looking like it could do a 13% fall. Now, I think that's over the top. It probably would be linked to a deadline problem. If they go over the October 17 deadline and they talk about US Treasuries defaulting and things like that, then you could see a big drop. But personally, I can't see it from the charts. But can you see a 13% drop? We're not that far. I mean, that's a fair way away. Yeah, 4 or 5 I could see, but not 13. If they brought up the charts... Bring up the charts. Okay, so Lance, what were we looking at here now? Okay, so this will be the S&P, here we go, the S&P 500. Yeah. Now, where we are in that September show, I thought it'd go sideways with an upward bias. Okay. It's basically gone up. It hit 1730, which is very close to the 1744. Yeah. Now, it's sort of come off a little bit again, and it looks like it's just going sideways. It's actually holding up really well in light of the fundamentals with this debt ceiling. And we'll remember Americans have got nowhere else to put their money because bond rates are still pretty low. Right. Stocks look pretty good. So that's telling you what, Lance? You think a bit of a sell-off wouldn't surprise you, but not a significant one. Well, we spoke of this RS level, right? And I really think that, you know, at some point or other, and I don't think it'll quite happen right now, but I'm looking for it to blip up a little bit, so a little bit more upward bias, but then more, you know, I've written on the chart, I said more consolidation with downward topping risk. Now, what that means is that I think it'll come back down to the RS level. And what level's that? That is 1584. It's about 6.7% down. Okay. Depending on how it trades at 1744 and at this RS level, which is down 6.7%, I think that will more or less set the tone as to how we're going. Yeah, okay. And obviously, this is a difficult thing for you to predict because you've got this curveball of the deadline and what Congress is going to do. And that is a significant event, isn't it? So if they surprise us and cure it, there could be a big bounce up. But if they don't fix it, there could be a very big drop. So you're under pressure here, Lance. I don't mind that pressure. Okay, love it. Good. Let's go to the next chart. And the next one is gold chart. So tell us what you think about gold before the chart gets up. Well, it's actually shown a little bit of uncertainty. You know, this one, I thought it...
Tell that to Newcrest shareholders. They know all about that. Go on.
You know, last time I was on the show, and here we are, in September, I thought it had a chance of testing the little t, and that's a little test. And you know what? From between the last show till now, it hasn't gone there. Okay, so this chart has actually softened a little bit more. It's stayed under that sweeping yellow line, which is the 200-day moving average.
It's not looking bullish to me, Lance, is
It's certainly not looking bullish, and in fact, there is a little bit of work to do. This chart is right on a level which will determine whether it's going to go up or down at the moment. Now, I've always liked it if gold can actually stay stable or go up a little bit. It shows that, you know, there's demand in China for gold. You know, it shows that stabilising situation there, and it's not doing it at the moment. Now, this is causing me a little bit of concern, not a huge amount, but a bit of a concern on a negative side.
Okay, so you think gold is, in a sense, ready to go up, but the lines are telling you it might go down.
Yeah, look, the jury, unfortunately, is right out today. I mean, it's you know, it's sitting right on a support where it is at 13.13.
Well, let me do a fundamental analysis. If the Yanks do screw up and the stock market does go down, gold will probably head in the opposite direction. And that could actually, I hope this is a scenario that doesn't work out. At the moment, what you're alluding to is a possibility. Market could go down, gold could go up.
And so this is causing me a little bit of concern here. That's right.
Yeah.
So this chart actually is showing the uncertainty rather than any certainty, unfortunately.
Okay. Well, you can't always have certainty in these charts.
Right.
Now, the next one we're going to go to?
The Shanghai. So the Shanghai index continues to be good news, Peter.
And it was a shocker there for about 12 months, wasn't it?
It was terrible, and it actually broke through the B levels, the bad level that you can see there. And what we have at the moment, September, where I've marked on the chart was where I was last on. I thought at the time that we would see continued consolidation with a higher focus on G1. Now, I think we remain range bound with between G1 on the higher side, which is 2318 in the medium term. I think in the short term, because we've been on holiday since 1st of October, and
by we, are we talking about the population of China?
That's right.
Which you're remotely connected to?
That's right.
Okay, right. We as in China. There you go.
So China has been on holidays since the 1st of October, actually pretty much like the US government, right?
Yeah, definitely.
And so you can see there I've got a little S just below. I thought it was headed towards that at the end of the last show, and then I was looking for it to bounce back up, and of course the market shut down before it could do that.
Right. Okay.
I think we still have a chance for that to happen, and then for it to move up to G1. I'm positive the Shanghai index. So that's a really good news.
Lance, do you think the Shanghai can be out of kilter with Wall Street?
I think it is opposite to Wall Street.
Yeah, because it was falling down when Wall Street was going up.
I think this is a good thing. I think that where the West is looking strong, the East might be looking a little weak, and vice versa. And I think this is a nice cushion for the global markets. Okay,
so it sets us up nicely for our own market. Because I'm going to ask you, do you think the local market has connections to Shanghai? Are we influenced by Shanghai? The team, put up the chart while I was talking.
Well, look, definitely it is influenced by Shanghai. Right. I think that, you know, in the longer term, as the Shanghai index improves, well, the Aussie market, here's the chart that's just popped up. Now, unfortunately, the chart at the moment looks more like the US chart.
It does.
And what you can see there is that you can see on the very top, it's gone up 22.6% in 11 months. It reached that top on the 27th of September, so it was after the last show that I came on. I thought in the last show that it would still do not too much to keep going sideways. It's actually made a new high and then come off, so it's actually gone up, you know, 20 points since the last show, and hasn't really done much as I suspected. I think this is mirroring the US, where I think it'll come back to the 200-day moving average, that S mark there.
Now you've got two S lines. You've got a straight line, a big S line.
Yes.
And you've got a little S line.
The little S.
Yeah, so where that yellow line hits the little S, that is the 200-day moving average.
And I think that's...
And we're a long way above it.
We're a long way... Well, we're 3% above the 200-day moving average. So I think it could come off 3%, all right? Now, that's where I think this market is going to go between now and when I come on next. In relation to your longer-term question, are we going to be... you know, remember last show you said, are we going to be at 5,500 and beyond?
Yes.
Right? And you asked me...
And that's because I made that bold prediction early in the year, and I'd like to be right.
Well, you know... There's a lot of things hinging on
yes, I know.
At the moment.
Apart from my reputation, but go on.
You know, I think how the US trades through the 1744 and again at that retracement level that was identified on the chart, how it sort of trades between these marks will actually determine, I think, whether we go over the 5,500 level. I think if Shanghai stays strong, and there is no indication as to why it shouldn't.
And that also means that China's economic data remains strong.
Right. Then I think we're looking good, okay? But on the flip side, you know, I think for the first time on this show for quite a while, I'm saying that the US market is looking potentially toppy now. And so those are the two balancing...
When you're up 28%, it's kind of likely, isn't it?
Well, you know, which means that if you look out for the next 12 months, after we've done in 11 months what we've just done, is it reasonable that we go sideways more? Or should we keep going on, upwards?
Yeah, and what's critically important, Lance, is not only do we have this October 17 deadline, we also have earnings season. And there's been a lot of speculation that revenue will start to show positive signs in the US, because to date their profits have improved on cost cutting. If that revenue number doesn't come through, that could be another catalyst for the stock market to go down. I hope that's the main reason for the market to go down, because it'll only go down by 4 or 5%. But if there's a stupid deadline problem, then it could go down by a lot more.
Let's hope it's the not the worst problem, you know. Let's hope it's the former and not the latter.
Without doubt. So, Lance, in terms of your investment, and we're running out of time, but you've often been an investor in gold. Are you taking a punt on gold at the moment?
No, Peter. I'm very light on, and in fact, as an overall tactic, which your readers will see in the Super Report, I'm actually advocating a bit of caution now. I'm advocating that on the next blip up in the US markets, on the next blip up that we have when we stabilise, investors might look at taking a little off the table in preparation for lower levels where they could buy back.
Okay, mate. Fantastic. Thanks for joining us on the program. Always great to see you. That's Lance Lowe from Accountancy Invest. Okay, that's the show for the night. Thanks for joining us. I'm Peter Switzer. If you want to check out my morning blatherings about Wall Street, go to switzer.com.au. They're not really blathering, they're actually very astute observations. And if you have a self-managed super fund and you'd like to get access to Lance's great points of view, have a look at the switzersuperreport.com.au website. I'm Peter Switzer. Thanks for joining us. I'll see you tomorrow night.